Hey everybody, and welcome to Stock Abilities. Today I'm going to be covering kind of upgrades and downgrades and utilizing it as a swing trading strategy and how this can benefit you very, very easily and gives you a little bit of an insight into market psychology, things like that. And we're going to jump right into it essentially. There's two things that you want to focus on. An upgrade, obviously, upgrade can be reflected as, like a newer car or a newer model, so on and so forth. When analysts do this, they upgrade a stock saying, hey, look, this stock has a lot of future, et cetera, et cetera. The reality of an upgrade is often that they are trimming their position when they're upgrading because they capture that momentum on the uptrend. So they're saying, hey, quick, buy into this. This is great. This is perfect, so on and so forth. A lot of these kind of analysts do this for their, various connections going on with the upgrades and the downgrades for those analysts to help benefit, banks, institutions, hedge funds, all this kind of fun stuff. But you got to think of it in a market psychology kind of way. If they are upgrading the stock, it's likely that they are trimming the stock. They're really not as interested in it as they were before. They capitalize on that momentum going up. Uh, Positives, negatives to it. As a day trading, an upgrade is usually a good uptrend depending on the stock, depending on the stock's float, all that kind of fun stuff. But in regards to a downgrade, you're thinking, well, downgrade, broken down car, broken down vehicle, so on and so forth. It comes back to the same thing as market psychology. You see a bunch of downgrades on a stock, whether it's before an earnings, whether it's before, a major catalyst event. It usually means that it's probably going to be bearish. A good example of upgrades and downgrades recently was with Tesla. Tesla had battery day. Everybody got super excited about it, got a bunch of upgrades and everything. And then when battery day came, it, of course, reflected a sell the news event because everybody was so excited about it. All the upgrades came in and everything. And everyone's thinking, well, there's a lot of upside to battery day. But the reality is that media outlets and analysts and hedge funds and all those kind of people are not on your side. They do these, articles. They do this, this hype or whatever to fill and benefit their positions, not to benefit you. So that is something you have to keep in mind when you're trading. Coming back to market psychology, pretty straightforward. They do a lot of various things to impact things. They have, pandemic narrative. They have all these fun other narratives with, money printing and Powell and Trump all talking in debates and all this kind of stuff. Fun fact for viruses that a new virus comes out every election year. Every single election year for like the past 5, 10 election years at the very least. So that is something you got to keep in mind. That is this a coincidence? Probably not. Were they expecting it to be as bad? Probably not. Is it part of micropsychology that they're utilizing? Yes, they got greed, fear, excitement. They manipulate your emotions in order to benefit their positions ultimately. So you get a debate or politics or whatever. They're manipulating the price up and down to give you that market psychology, is to make you think that the narrative that they're pushing out is relative to what's really going on. Momentum is momentum. You can find a list of, Market Watch actually does this. They list all the upgrades and the downgrades. For the bigger tickers, it's pretty obvious what their intentions are, especially if a stock is up a lot and they go and towards the end of the day, they upgrade the stock. That's not going to end well for you if you're trying to chase that, or you're trying to chase that news. You're trying to chase the rumor that's no longer a rumor, but it's news now. So sort of like back to with Tesla, they were upgrading Tesla. They were saying how great battery day was, so on and so forth. Then after battery day came, they started to bash Tesla, and then of course, it started rising up again. I'm sure you guys are seeing the connection here to upgrades and downgrades, but from a swing trade perspective, it's usually best to do opposite of what the upgrade or the downgrade is suggesting or implying because they are trimming their position. You could day trade it on the downgrade or the upgrade, but overall, you want to trade on the aspect that you just inverse anything that they say. Going a little bit further into that, here's an example. very specific one outside of Tesla. uh, Banks upgraded this. You had analysts that upgraded Dave and Buster's. They said, "Hey, two upgrades, looking great. Hey, their earnings are good. They're recovering. They're reopening stores." They pushed this for almost a month and a half with all these upgrades and all this praise before its earnings, and then of course you get news of bankruptcy news, and then you get a bad earnings right before that. They were pumping this. They were saying how great it is. Right after their earnings, and they had such a bad earnings, they said, well, there's still promise, and they started upgrading it again. Then the bankruptcy news came. Obviously, they know a lot of this stuff a little bit ahead of time. How much ahead of time? Hard to say. What that might mean for you as a shareholder, really your interpretation. But apparently, they're reacting to news that is not out yet. This is roughly when they were upgrading in this range here in the 18s, high 18-ish. Then, of course, they started saying, well, it's great, it's great, it's great. And then, of course, oop, right down there, bankruptcy kind of news, then kind of fading since then. If you look at its overall chart, it's been kind of choppy lately, but they always tend to upgrade at the higher points of that chart, 18s ish. The lower end, they're downgrading, saying, oh, it's crap, don't buy it. And, on a year to year and so on and so forth, I still think that play has promise, but that's not what the point of this video is. The point is ultimately, this is a swing trading strategy that you can be easily utilizing in that regard because, swing trading upgrades and downgrades are not your friend in the end unless you're usually utilizing it to inverse essentially what they're suggesting you to do. So if you go in, let's go all the way back to here. Let me get to it. You see a lot of upgrades coming in for a stock. You see a lot of downgrades coming in for a stock. It's best to usually inverse that in a swing trading capacity. I mentioned swing trading because sometimes the upgrades can carry for a day, 2 days, 3 days, so on and so forth. 3 day marker is generally the time of which you'd ultimately want to consider basically going more of a longer term swing. The swings trades tend to carry could take weeks, months, whatever, but they almost always inverse back to that default point. They always come back to the point where essentially your swing trade will be profitable more often than not, as long as you're getting in after the day trade momentum, after they are basically unloading their position, which creates a short squeeze, which is why it tends to go up on an upgrade and why it tends to go down on a downgrade is because they're manipulating that market psychology aspect, ultimately creating a better entry point, a better trim point. Just because they upgrade a stock doesn't mean that they're 100% getting out. They trim over time on a week to week basis, a month to month basis. So this is only good as a swing trading concept. This is not good for long term trading. This is not good for day trading unless you're day trading that momentum from that upgrade or that downgrade. If it's an upgrade, that's bullish for that day. If it's a downgrade, that's bearish for that day only. For a swing trade, it can be a bullish or bearish on the inverse for weeks potentially, depending on the stock, depending on where it's trading at. You got to look still at the general overall fundamentals and technicals of that stock. Sometimes they're just doing little mini range volatility spreads and things like that. So that, like with play, it's in a kind of a tight range, and it's been in a kind of a tight range since March of 2020. It hasn't really, even back in let's see here, back in March it was $17 a share. It's only $15.55 right now per share. So they often do this in tighter ranges, especially on stocks like play where they can bounce up and down while other people are getting essentially ruined because they're believing in these upgrades and they're believing in these downgrades as more longer term confidence in the stock. Now, just because a stock gets an upgrade, gets a downgrade, that doesn't necessarily mean it's going to have much of an impact. You got to pay really close attention to the stock's float. Stock's float can affect how much it will move up or down. Smaller floats good, larger floats kind of depends what the stock is doing, what the ticker, what market cap. A lot of different variations come into this. So before you just jump in and say, hey, well, this stock got downgraded, so it's going to go up, that's not always the case. It might have a little bit of a fluctuation. You want to pick those ones that move in more of a broader range or in more of a channel. You can find channel stocks in places like Finviz and other related types of tool websites. Bar chart gives, different channels of stocks that you can be utilizing for that same aspect. But I believe that's about all I wanted to cover in this video. The very point being is that market psychology plays a very big thing, on the markets, and as a person, who you are as a person, they're manipulating that market psychology, that concept that you think, well, upgrade is going to be always bullish and downgrade is going to be always bearish. But that's not why they use upgrades and downgrades. They have a lot of capital that they work with, so they need a lot of liquidity. So they need to do an upgrade. They need to do a downgrade just to trim their position or just to add to their position, because otherwise they wouldn't make very much profit, especially on these smaller tickers. So that is just something I wanted to cover in this video. Make sure to share below your own input on your experiences on swing trading, upgrades and downgrades, what you feel for the future of, analyst upgrades, downgrades, and how you might feel in the future, whether this is still viable. I've been doing this off and on for years. I've always had a high success rate utilizing this strategy, so I figured I'd share it with you guys. Thanks for listening in. Make sure to like this video. Don't forget to comment below what you think about the video and subscribe to the channel if you have not yet. See you later, guys. Have a nice day.